Hello, everybody, and welcome to Hash Rate. Today we have a very special show. We're going to do a panel for the very first time. So my guests today are Michael White of BitTensor Fund 1, Keith Singery of TAO.com, BitTensor Guru Podcast, and Subnet 81 Patrol, and David Fields of Subnet 33, Ready AI. Hello, gentlemen. How are you all doing?
What's up, Mark? How are you?
Thank you for being here.
Thanks for having us, Mark.
Yeah, thanks for having us on.
All right, so let's get to the first exciting question of the day. So Dynamic TAO, otherwise known as dTAO, launched roughly 90 days ago. And this is a system whereby every subnet now has its own alpha token, which can be obtained by staking TAO. The market cap of the subnet dictates how much TAO emissions are then routed to that particular subnet and to subnet token holders. Now, the idea behind this was to let the market decide which subnets are worthy of TAO emissions and thus improve the quality of AI projects in the BitTensor ecosystem. Question, is this system working? What's working and what's not? I'm going to throw it to David first. What are your thoughts on this?
Yeah, so we've obviously talked a little bit about this, over the last few weeks. I think taking sort of a longer term perspective, for the first 90, 100 days, here, pretty incredible. I think there was a significant, technical hurdle to sort of get over with launching. I think we saw very minimal kind of problems in the early low liquidity days where a lot of, kind of challenges I think could have developed that really did not. Yeah. Now I sort of think that, my biggest sort of perspective here is, okay, we actually now have real data. We talk a lot in the TAO ecosystem about how everything has to be tested on prod. We can run simulations all day, but it's very different when you sort of put it all in practice. And I think we've seen some data here that suggests to me that we're not getting, the desired outcome of, participation in alpha at a really material level, really having the network drive emissions to the highest quality subnets. I think most of what you're seeing with activity on a day or week or month-long basis is still very like low liquidity behavior where, it's popping because there's a new subnet that may be taken over by some group. There's not substantial updates or kind of, real significant, insights into why those movements are happening.
Just put some numbers on it. So only 7%, somewhere between 7 and 8% of TAO has been staked for subnet tokens, which is pretty low. And the root emissions, I tried to look this morning and the sites were not cooperating with me, but the root emissions are somewhere around 20 to 25%. So there's very little incentive to move out of root and get that 20 to 25% and into subnets, which is one of the reasons why it's only 7%, right? So I'm sorry, David, but I just want to put some numbers on that.
No, and then just to kind of round it out, I mean, I think another important thing when we say that there's 7% of TAO on subnets, that's actually less than has been emitted by the chain, which I think is just an important thing for people to understand. And there's this metric of, TAO injected versus TAO reserves. And so, there's actually 12% less TAO in subnets than has been emitted, since the beginning of TAO. And I'm not sure if that's, a problem necessarily, but it also feels a little bit out of whack with where you have some of these other metrics, like sum of prices still being nearly, kind of 2x, which, I'm sure the other guys can jump in and talk a little bit about.
Yeah, let's hear from Keith now. So Keith is like the OG in the space. You've been here longer than anyone. So, what do you think of dTAO? Is it working or is it not working?
I think it's working a hell of a lot better than what we had previously, which was the validators, right, determining the emissions, and myself being one of those for the validator that I was running at the time. Determining where to put 5 or 6% of the emissions as a kind of a singular entity, or even if you have a team, is really difficult. So having the market sort of speak for us as far as emissions are concerned, that part I would say is working. I would echo what David's saying, though, and that we're not really seeing the level of participation that I would have expected up to this point. And the key metric for that, like we talked about, is really this number of injected TAO versus kind of the organic flow of the market coming in to participate. There's like a few 100,000 tau that's not really moving. That's, if you look at kind of the top holders on most of the subnets, it stays pretty static. There's a couple of larger wallets with tens of thousands of tau that move in and out of sort of the alpha space as the trade winds blow with this project, but mostly that's on like socials and the different momentum that happens when projects are releasing and people try to catch those waves up and down. We are seeing, of course, like the market kind of solidify, and this low liquidity thing is becoming less of a problem because the amount of tau that's being held and that's sitting in the subnets is growing in relation to that tau that's trading in and out. But what we aren't seeing is like, what we haven't seen yet, I would say, is really like the next big wave. If you look like 6-7 weeks ago, you see this huge jump up into like the low, like 2-3 range for the total subnet price. So that's 2.35 or whatever we hit. And then we've sort of been on like the slow march down from there over the last 6-7 weeks. And, there's a couple different inflow opportunities. Michael likes to talk about those. And I think that those, when we start seeing the next 1 or 2 dominoes fall, then we'll really see this thing take off in the right direction. For now, we're sort of treading water as far as I'm concerned, as like effectiveness of the whole, dTAO mechanism.
Yeah. All right, Michael, what do you think?
Yeah, I agree with everything that Keith and David said. I think in terms of the protocol, everything turned out, everything worked flawlessly. I think everything functioned exactly the way the foundation and all the other people putting the work into the dTAO rollout intended it to function. I know David's commented historically that there are different ways. The data that we have now still shows very, very elevated yield for people staking to root. Of course, I'm going to be biased there because I'm mostly in subnets as opposed to stake to root. Yeah. But there's reward that probably shouldn't be going to people who are taking. I could make the argument, right, if I wanted to, that there's reward that shouldn't be going to people who aren't taking risk commensurate with that reward at present. At the same time, it's a free country and it's an open protocol, so people can stake wherever they want to stake. But one thought that David has brought up repeatedly is, on social media, on X, is that there's a still elevated 23%, whatever it is right now, yield for staking to root should be coming down. So if you look at kind of post dTAO and say, is everything running smoothly? Yes. Is everything running the way it was designed in terms of who's earning what yield? I think there's still room to make some improvements there.
The root is too damn high. That's what we've been saying, right? So you remember that guy's like, the rent is too damn high.
Yeah. I used to work around the corner from that guy in New York City. And again, of course, I'm biased. I'm a subnet guy. I want to support as many projects as possible. Whether Keith or I agree about which projects should be supported. The reason the ecosystem flourishes is because people are out there putting their money where their mouth is. That's the way it's designed to function. I think we should see as much of that as possible.
Well, is the root too damn high? I mean, I'll be honest. I did not expect the root to be 23, 25%, 90 days into dTAO. The way it was the way I understood it was that root was going to sort of dive towards zero, like maybe around 3%, 4%, something like that at the day 90 mark ish. And that would basically force all those kids living in their parents' basement out into the world to actually work for a living and bet on some subnets, right? That's what I thought was going to happen, but it hasn't happened. So all the kids are just down there playing video games and root and collecting their 23% or whatever. David, is the root too damn high? Is that working or not?
Well, look, I mean, maybe to sort of like add a little bit of a hot take that I'm sort of curious, Michael and Keith's perspective on here, but I don't really know that implementing tau weight, sort of the way I am suggesting with having it, and sort of making it quicken over time. So just to level set there, what I've sort of suggested, I think that tau weight, was established at the beginning, not finger in the wind, but basically there were a few different places it could have been set at. It was sort of determined that the best place to kind of set it at was 0.18. And it effectively meant that by 90 to 100 days, you'd sort of get to a root proportion where root was earning 50% and alpha holders were earning 50% of the rewards that go to validators at kind of that 90 to 100 day point. And a lot of why that was done was to stabilize these subnets in early low liquidity, where it's really important that you don't have like new alpha holders come in and just, take over controlling validation and, effectively do like a 51% attack on the network.
Yeah.
That has worked really well. It's ultimately been very stabilizing in the early sort of part. And so now that we're seeing 90 to 100 days out that the numbers are different, I think personally that we need to make some sort of a change to get more participation in alpha, like Michael's saying, because I think that's what's better for the network. My hot take is I don't actually know that that's better necessarily for alpha holders, because there are all of these trade-offs in how dynamic TAO is designed, which I think is part of the beauty of it. But right now, like there's an aspect, and Keith and Michael, I'm kind of curious your perspective. But if we sort of sit in this holding pattern where now all of us who, are heavily allocated into alpha are earning, 80 to 100% APY, and that's not going to come down as, we're sort of in this treading water state, or it's coming down much slower than people allocating to alpha. There's sort of like an interesting balance there, right? Where, and I've had this argument, in the RAL channel where like if some of prices, goes up, root also might stay at just as high of an APY. It's unclear, but at least it will get more people participating, which I think is fundamentally what we're trying to do. So that's kind of my.
So your argument is basically that like if for those of us who are in subnets, right, we have alpha tokens, for that portion of TAO that we've staked for those alpha tokens, we're getting like 80% APY. And the reason why is because there's such low participation that 7%, if that was like, 90%, we wouldn't be getting that 80%, right? Like, so
yeah, I mean, if it doubles, it halves the APY, I believe. So, yeah.
Yeah. All right. Keith, what do you think? Is the root too damn high?
Yeah, I think it is, but I don't know what to do about it because, the thing is actually kind of working the right way. And what would be best for all of us on this call, who we are probably more invested in alpha than not, is to get the next, whatever, 100,000, 300,000, million TAO over to the alpha side as soon as possible. But with that, or maybe just in an equal, even way over the next year. I think we'll probably get that. It may not be coming at the timing that we all, want at this point, and that we kind of maybe expect after the first couple of months of doing pretty well if you were kind of like DCAing into the subnets. So, yeah, I do like David's proposal of having some sort of halving event on the APY for root, which is currently like, I just checked it, it's somewhere like for most validators in like the 18% range. In the end though, like I struggle between like, okay, the emissions are working, right? Like the emissions are going out to the miners, to the validators, to the subnet owners, all that's happening properly. Do we mess with it now because we just want to speed it up? Yeah, we probably could. Is 0.18 the perfect number? Like, no, of course not. The 0.18 is just rife throughout the ecosystem. We've had that number like been something that's been floating around on all these different metrics that we've been using. So we just used it again because it's been working for the project for like years. So like, yeah, we could mess with it, but we could also just wait another couple months. I think David, though, his opinion matters a little bit more than mine or maybe Michael's because he's a subnet owner. So if he's talking about, hey, we need to lower it, I mean, there's also, if you look at it from the subnet owner perspective, there's subnet owners that have a couple tens of thousands of TAO essentially that they could put into their own subnet and start messing with the emissions. That's sort of mitigated by the fact that the prices are a little higher than we expected them to be. So it's a little harder to like grab a big chunk of the daily emissions because you got to get your price up to maybe double what kind of a lot of us expected, which looked at subnet prices hopefully maintaining above 1, and now they're like, flirting with 2 most of the time.
Mm-hmm.
Yeah, I guess I would sum it up with that is I don't know what to do about it other than just keep playing the game and let the APY for me and everybody else that's in alpha kind of take care of this treading water time and keep us comfortable and warm as we wait for the next wave.
Yeah. All right, Michael, what do you think?
Yeah, I think, the onus should be on every subnet owner to produce a product that attracts investment. And this is a fundamentally different game than pre dTAO. And, do I want more funds to move into alpha tokens? Absolutely. But I don't know that kind of forcing people through a protocol adjustment is necessarily the way to do that. For all intents and purposes, everybody who's invested in subnets is still kind of playing musical chairs. Like it's all the same investors. Some of us are heavily invested and we're letting our money sit in one place. Others are kind of moving around. Some are playing the cold key swap game where you're trying to predict, basically which subnet Joseph Jackson is going to buy next. There are a lot of different games that all of us are playing, some chasing headlines, whatever, Sturdy's announcement, Subnet 10. And I think all of that leads to efficient markets and price discovery, which is a good thing. But ultimately what is needed, in my opinion, to take Bitensa where I think all of us want it to go is for significant, TradFi capital to come in. And for people who, maybe it's VC funding, maybe it's, I would love to see more kind of strategic investments. And I was talking with a Subnet about this morning, but somebody who's maybe a closed source industry participant and present who wants to build an open source solution. And, how about I take a significant stake in a subnet that's building out what I want to see, and be able to use internally instead of self-developing it or instead of buying a closed source competitor or tack on or whatever the approach would be. And I think that's going to be incredibly valuable. I think that's ultimately where subnet investment needs to come from as opposed to forcing people's hands through a protocol adjustment.
Well, I think you bring up an interesting point, which leads me to my next question, and which is, what is the ideal successful subnet? I mean, I think all of us would agree that nobody's really, there hasn't been a wild breakout yet that's a very clear success. There's some interesting early signal, right? Like Shoots is early signal. Arguably Tau Hash is early signal. There are things which appear to maybe be succeeding, but nobody's really cracked the formula yet. I've heard different opinions on this. I've heard Kant say that, compute will make 2x, inference will make 10x, and intelligence will make 1,000x. I've heard that comment. But I watch like these subnets develop, and like, what is the point of what we're doing here? Because one way to understand it is one of the reasons why Shoots does so well is because they provide, largely free models that anyone can just go fire up, and they're subsidized by their Tau emissions. So is that bad, or is that sustainable? Is that good long term? Are they supposed to earn revenue eventually? Are the emissions like VC investment that they like a crack pipe that they have to get off of eventually? Not that there's anything terribly wrong with that. Uber did the same thing. PayPal did the same thing, right? So it's not necessarily a terrible thing. But what is sort of the path of the successful subnet in your guys' opinion? Keith, I'm going to start with you.
Yeah, the path of the successful subnet unlocks the intelligence behind the mining pool. So the unlocking the inference ability behind the mining pool is just like the basic strategy up to this point. For example, like when you have a miner and you release them into the wild on your incentive mechanism to start performing some task, like the way to let them do that is to give them the most freedom possible, but while designing an incentive mechanism that like susses out an increasing level of intelligence from whatever the output process is. And right now we sort of have like hybrid versions of that where we have like subnet 93. and I forget the name of it, but what they try to do is essentially like incentivize people to create media content for these different, they're calling like portfolios or something, but basically these topics. And then they get everybody to, as a miner, you put your video up, you get rewarded based on the views or whatever. And it's trying to marry the ability to create content with the viewership, and so to entice more people to get interested in BitTensor. But what needs to happen is that same sort of model needs to be leveraged on the creative side of the intelligence itself, not just generating media. So, for example, like on top of Shoots, what needs to sit on top of Shoots is some sort of incentivization layer for designing agents and the use of those agents, or designing, hosting models yourself. Maybe just making the model available and linking it to a certain miner, but some sort of usage, element on top of just the pure drop a quarter in the slot for the compute. Because the real value, the multiplier, is the human intelligence behind the scenes acting as like a lever to launch all of the AI projects. And for a subnet to do that properly, you have to have a platform set up that can be a sandbox or a creative environment that like pulls in all of the possible iterations of whatever your intelligence commodity is into like usable features or tools that then can be used by the public and that can be measured. So that's where we need to take, in my opinion, most of these intelligence commodities that aren't just like of the consumptive variety of computer inference, is that subnet owners need to figure out how to get miners to a platform where they can unlock their creative side, because that's the true value multiplier.
Yeah, what I'm trying to get at though is, and I agree with you on that, but I guess where I'm trying to go is like sort of economically, you get TAO emissions, right? So that allows you to bootstrap. Maybe you sell your alpha tokens to sort of stay alive. Is that okay, first of all? And then, should you economically be forced to create a product which you then charge for, or is it okay? Or is BitTensor sort of like PBS? Where we're producing AI, but it's completely subsidized, and living that way forever is totally okay. What do you think about that?
I don't think you need outside revenue. I think you can create a perfect subnet that uses the original model of BitTensor, with the validators acting as essentially the gatekeepers for the throughput. And if you have enough stake on your validator, by definition, the miners need to respond to you through the validation process, which also mirrors the organic querying process for a lot of these subnets, where users would generate their own commodities essentially through the validators, using either the TAO that is staked to, or the alpha that is staked to that validator, as kind of like here's my golden ticket to use the bandwidth of this validator. Or if you don't have enough and you want to like charge a la carte, you charge alpha per usage or whatever. You don't need the revenue, because the revenue itself, it takes care of itself if the demand is there for the alpha token and for TAO. You can bring the revenue like we have on 14 with TAO hash, and they're bringing in the revenue from the Bitcoin mining and pumping it back into the subnet. Like that can go on for a certain amount of time, but like I said before, there has to be a creative element to really leverage the value of these intelligence commodities.
All right, Michael, what do you think?
Yeah, listen, I think that nobody has really figured it out. And I know that sounds like an overly simplistic statement, but what I see in the ecosystem that I don't like is, one subnet owner posting something or saying something about another subnet owner, like, aren't you glad, all my alpha holders, that we're not doing it this way? Mm-hmm. And just kind of crapping on somebody else's ideas, as opposed to openly admitting, the reality, as far as I see it, is that not a single subnet owner has figured it out. I think most subnets, at least the teams, like David's and other teams with whom I've had conversations, most subnets are doing things that are incredibly creative, that have a lot of potential to ultimately be very valuable. But I think every subnet needs to figure out its own business model. They need to be very intentional about that business model. They need to determine, if it's going to be kind of a TAO internal and BitTensor internal product, a product that's internal to the ecosystem, or if it's going to be an external product. When we were in Austin, this was kind of one of the themes of the conference that was brought up again and again and again. Is to me, the real win is a year from now, 2 years from now, people all over the world are using outputs rather from the Bitensor network, but they have no idea that they're coming from the Bitensor network. And one of the reasons why, at least from my vantage point, Shoots, has been the early leader is because they made a very simple, very intuitive user interface that allowed people to use outputs from the Bitensor network without, quite frankly, knowing anything about the ecosystem. You go to their website and you open up the playground and you're off and running with whatever choice of model that you want to use. And I think that was beautiful. I think it's brilliant. I agree that they're, seeing how they respond to now this kind of transition from freemium users into paid users, it's going to be a very interesting kind of case study for not only Shoots, but quite frankly, the whole network to see is there really this appetite for Bitensor products outside of the ecosystem? My hope is that a lot of subnet owners use their outputs in a way, or allow others to use their outputs in a way that the outputs break free from the Bitensor ecosystem, and then eventually, I think that will cause people to get involved. But I think we have to make things as user friendly as absolutely possible to get people interested in the ecosystem. And then once people dip a toe in, we've all been there, right? You read the white paper for the first time, or you just read a few, Mark Jeffrey posts, whatever the case may be. And all of a sudden you're hooked and you're knee deep and you realize the brilliance of the ecosystem and you can't believe you ever lived without it. But I do think there have to be external facing revenue generating products. I don't think that has to happen overnight. The call that I see from some people in different forums that, you need to produce revenue now. I don't think that's realistic. I don't think that's fair. I don't think that's the way things work, outside of the Bitensor ecosystem. I think teams need to be given grace and patience to figure out what their model is going to be. And then each team should have a model that works for that team.
Okay, so you're advocating for sort of a VC type model where the blockchain, the Bitensor blockchain and its emissions are there for venture funding effectively, but eventually you should figure out a business model which produces revenue. That's largely what you're saying, yes?
I'm advocating that should be part of an offering. I think there are subnets for whom that model will work very well. I think there are other subnets, where you don't need that model at all. Some subnets you're I think 88 is a good example of this, right? 88 is owned by a fund based out of Texas, and as far as I can tell, the primary purpose for them producing the subnet, without knowing a whole lot about them, but the primary purpose is really for internal use, and that's great. If there's a company that wants to spin up an open source solution to take advantage of the brilliance of miners who are contributing to the Bitensor network, I think that's awesome. My point is I think there should be a whole suite of possibilities that we look at, and I think subnet owners should feel confident, should feel free, should feel entitled to choose from any number of a range of solutions that work for their particular subnet.
Okay, but it sounds like you're in a different place than where Keith is. And, Keith is like, sort of the PBS model that I was describing earlier, right? Where it's, the blockchain and its emissions are there to subsidize projects, and they don't really need to ever produce revenue or be like, a real world company, which, in Keith's defense, that's exactly how Bitcoin operates. Like it's the same thing, right? It's literally the same model. And that's produced one of Earth's greatest products, no question about that at this point. So we're sort of 1-1 in my mind. David, where are you on this debate?
Yeah, so obviously I come at it, both from a subnet owner perspective, but I also, my whole history is as a professional investor, having done it, for Disney on sort of a large scale basis, and then, kind of in private equity and venture for the former CEO of Disney. So I kind of think, again, like, we're so early in a lot of this. I think part of what is so great about the way that Bitensor is structured with its sort of incentive layer is that it enables a lot of diversity. There are definitely some experiments that I'm less excited about personally, that I won't necessarily pinpoint on the network. But I also think it's good that they're there experimenting, because I don't necessarily know the exact shape that, and I think there will be multiple shapes of successful subnets that emerge in this ecosystem. But a big sort of perspective that like we have, with our subnet is we really believe that subnets need to demonstrate the value of their commodity to the outside world. Like I think that, has become a real forcing function, with dTAO. You obviously see a lot of groups, having moved much more into marketing and promoting what they're doing. We used to just like, try to get on the phone with Keith and harass him with updates. And, now we've actually got to, present to the outside world. And
because Keith was your customer as a validator. That's why you had to call Keith.
Exactly.
All the dTAO investors.
12-ish validators, right? And Keith was one of the big dogs. So, we had to find a way to get to him. And that's why dTAO was so important, right? Like that shouldn't be, the way that the ecosystem works. So, I think for, subnets, there's definitely a forcing function on figuring out value to the commodity that you're producing. That might mean showcasing a path towards revenue and demonstrating that you're in an area, we think we are in terms of structured data, which is, already like a $5 billion, kind of market that's growing to 30 billion in the next 5 years. And there's massive players like Scale AI. And I would sort of tell new subnets also to think about like, well, what's your strategic positioning against these guys? I think as a Web3 company, you are at a disadvantage, to Web2, given some of the, historic like vaporware and lack of quality, sort of in the Web3 space. And so for us, a lot of it is just, a cost advantage where, leveraging LLMs, we're able to perform at a much higher accuracy level than sort of more expensive human annotators. And that's sort of our pitch and our, kind of edge in terms of, how we're leveraging that intelligence. But I just think that strategic positioning is important. And, for Shoots, which I have a lot of admiration for what they've built, I think you have seen, you alluded to this, Mark, Uber, PayPal, PayPal was, just handing out $20 bills, which, might look like a Ponzi scheme other than, they turned that into, a successful business because, that was their cost per acquisition. And so, there's a freemium to paid model that, has worked in, many, many businesses. And I think the Shoots guys are doing a good job of bringing in that demand, showing that their commodity or their service is as performant as any, sort of Web 2 platform. And now they do have to cross that chasm at some point, to more of a paid product. But I have, confidence that they'll be able to do it and others will as well in the ecosystem.
Do you think that subnets should be allowed to sell their tokens? And I mean, like that practice should be normalized. Is that something, or is that to be avoided? What are your thoughts on that?
What structure are you talking about? Are you talking about like an OTC transaction like we saw with 44?
Good question, actually. I just meant in general because, I mean, so before dTAO, right, when subnets were selling the TAO emissions to sort of keep themselves alive, it wasn't like they were selling their own tokens. So it wasn't regarded as like a comment on their own project, right? Like a CEO selling the stock of their own company. Now it's different, right? Because now their emissions are in the form of their subnet alpha tokens. So when they sell those alpha tokens, sometimes out of necessity to keep their project alive, to basically do the PBS model or the VC model, that is now viewed as injury. That's like a comment on their project, or at least some people think of it as that. So it's the vibe has changed, right? So. Well, is it okay to sell your subnet tokens, or should that be avoided? David.
Yeah, David, go ahead as a subnet owner. I'd love to hear your take.
Yeah, so I mean, look, this is obviously something that we pay a lot of attention to, and I think we've seen certain subnets that have directly sold their token. We obviously saw what Score just did as well with an OTC deal, and what I've seen from the data is when a high quality subnet sells a reasonable amount of their token, the market doesn't seem too concerned about it. I think there are, louder voices that you sort of see on Twitter that might make you think otherwise. But when you actually look at the data, and I'm curious, Michael and Keith, what you've seen, but that's sort of what we've seen. And then I guess the sort of my hotter take, here is like, I think in a world where like no subnets can sell any of their token in the first year or two of building a brand new company, I don't think we're going to attract anyone to build on BitTensor. Would sort of be just my like if you just take it to the extreme, like you just have to be practical that subnet owners do have a business that we're running. We have a team of a dozen people. We're trying to build something really significant. We want to compete against the scale AIs of the world. And, you can't do that on a shoestring. And so I think you just have to communicate that, to your, alpha holders. And I think it does, obviously, the scale at which you're doing it and all of these things matter. And I think we've seen some examples. And I don't really want to get into like sort of like Michael said, I definitely don't want to throw stones here. I think this is a really important thing that is normalized. I thought Mog did a great job of communicating that on the last novelty search. Like, look, there's a amount of time, and we have yet to sell any alpha token. We've sort of taken an approach that we're going to hold for at least, the first, 100, 150 days, and understood that, we needed to sort of show that commitment. But I think it does have to be normalized at that point. JJ also kind of chimed in and said, he really agreed. Like in that 100 to 150 days, you could argue, should it be 100? Should it be 150 that a subnet sort of commits to? But at some point, they've got to start to pay for operations. Or you could see like wonky structures that come in that ultimately could be worse long term for the subnet. Do you want to have, a group that owns 50% of the subnet's emissions forever, and they're not performing any of the work? They sort of hold a very big stake. So fortunately, we control all of our alpha token. We haven't sold any of it or a portion of it, but these are real considerations that out of the 100 plus subnets, everyone has to figure out how they're going to operate and grow.
Keith, what do you think about this?
Yeah, subnet owners can sell. I mean, if I'm invested in a subnet and I don't like what the owner is doing, then I swap out myself. So like if I'm in 33 and David's selling his alpha at 500 tau, a transaction, and we're eating slippage and the price is dropping fast, like whatever they're doing, we have full visibility to it on chain. It becomes part of the value proposition for the subnet itself as to how they're selling the token. So if I'm invested in a subnet and I see them selling the token, the only reason I'm in that subnet is because I trust the owners of it anyway. I'm not expecting any kind of like external agreement or babysitting on what those guys do with their funds. Just the same as I don't expect if I'm a major holder on a subnet, there to be any restrictions on me moving my funds around. And so the people that are creating the value, the subnet owners themselves, in my opinion, can just do whatever the hell they want with their subnet tokens, and the market will react or not react to that, and the chips will fall where they may.
Michael, we've talked a little bit about this, and you've tweeted some things about maybe there should be equity investment from venture capitalists into subnets, and the venture capitalists get subnet tokens and lock them up, which is sort of selling it, but it doesn't dump on the market. It goes to VCs, and they're locked up for some period of time. What can you tell us a little bit about your ideas on that, and what do you think about this topic?
Yeah, I mean, first of all, subnet owners should absolutely be free to sell their alpha tokens. That's the way the protocol was designed. That's the way Dynamic DAO was rolled out. So, for people to be saying, that it's criminal, or even imply it's criminal for subnet owners to sell their alpha tokens, I think is silly. Because if you're not allowed to sell it, how are you supposed, like, the opportunity cost, and this is one thing that I think a lot of investors, nobody on this call, but a lot of investors I interact with don't appreciate, right? Is there's this sort of sense of entitlement that circulates where you say, well, I'm an investor, I have a right to demand certain things from a subnet owner. The reality is the subnet owners, in my opinion, are taking the greatest risk, because there's a massive opportunity cost that they're dealing with that they're sacrificing other opportunities to be building a potential network. So there has to be a way that they can monetize that. So me as an investor, I'm sitting in my desk chair over here, just kind of watching it at all the amazing things that David and other people in the ecosystem are doing, all the subnet owners. And, I get to reap the benefits of that, but, I'm not really taking the risk in terms of, giving up a career path or really stopping anything else that could be happening in my life in its path because I'm devoting, all my time and energy to building the subnet. So there has to be a way that can be monetized. And what I'm pushing for is for subnet owners to have as many options as possible. And when I make a comment around, there should be, whether it's, I'd love to see kind of a credit facility that opens up, whether it's DCG or another large player, DCG through Yuma or another large player come in where you can go to subnet owners and say, hey, we got $100 million, whatever the number is, $10 million to start. Let's start smaller. Of a credit facility, and here are our terms, and you pay us back through alpha token emissions or whatever it looks like. I think there should be options open. I don't think a subnet owner should be demonized for selling their alpha tokens. I don't think a subnet owner should be demonized for taking kind of a more traditional venture capital investment, as long as, and this is a huge catch, as long as it's done in a way that the value accrues to the alpha token. What doesn't make sense for me is for a subnet to sort of have, and DSV Fund announced this with Subnet 44, and I think that's a good example of it being done the right way. And I don't know the terms, I don't know the lockup, I don't know the OTC price that they negotiated. But long story short, DSV made a $100,000 investment in Subnet 44 for their alpha token. It was an OTC transaction. I think that's great. The reason I think that's great is because it gives more runway for Subnet 44's owners to build what they believe to be a long-term viable and valuable commodity, however they define that. And each Subnet owner gets to define that themselves. In addition to that, I would love to see other structures that I haven't thought of that people are proposing. What doesn't make sense to me is to have sort of a side pocket VC structure where, we're going to give 50% of our future emissions to, a venture capital firm, private equity, whoever, and they're just, as soon as they get them, they're just going to unlock them and whale them, and you're going to see the impact on the price, and there's no kind of long-term partnership that's being brought to life there. I don't think that makes sense, but I think that, all subnet owners, from my vantage point, are under a lot of stress because, especially for those domiciled in the U.S., you have two primary needs when it comes to cash. One is a tax liability, because technically, according to IRS guidelines, at least in the United States, the moment you receive emissions from staking from the protocol as a subnet owner, that's technically taxable. And I know there are some people who abide by that, other people who kind of ignore it, and that's your decision at the end of the day. But in addition, you need cash, you need capital for growth. So that's got to come from somewhere. So what makes zero sense to me is kind of armchair quarterbacks who sit back and say, well, they shouldn't take VC funding, they shouldn't be able to sell their alpha token. It's like, well, where do you want them to get funding from? Like, how are you supposed to grow a business if you have no recurring access to capital? So I think as many avenues as possible for subnet owners to have access to capital should be opened up, and that's where I'm hoping I'm going to be able to add some value to the ecosystem, is by bringing in kind of traditional sources of financing.
Didn't Durbin of Shoots do something interesting where he puts, I don't recall the details, but he said something like he put his, because of tax considerations, because he was making so much in emissions, or the company was, he created a structure to sort of contain that somehow. Do you know what happened with that?
Yeah, I think it was a DAO that's going to operate through a smart contract infrastructure where essentially it avoids him taking possession of subnet emissions, at least a certain portion of them, so that's not creating a tax liability on his end. I think that's clever. I think that's great. It works for him, so kudos to him for figuring it out and for doing it. I'd like to see as many structures as possible come online where people have creative solutions to cash needs.
Yeah. Okay. Well, I'm going to move on to the next question here. But before I do, there's been a lot of talk about, I forget what the term is, but constant, everybody's talking about like, well, the dTAO tokens will equal 1. It'll tend towards 1. And it took me a little while to figure out like what people were talking about because everybody else knew and I didn't. And what that means, I finally deciphered it, is if you add up in TAO, the price of every subnet token, right? So you just add it up in TAO. That will tend to equal 1 TAO, right? Like that's what the idea is that's being expressed. Now, in practice, it hasn't necessarily equaled 1 TAO. It's equaled 2 TAO, right? So that's sort of, and there's some debate over whether the proper equilibrium is 1 TAO or not, right? We don't really know. There's definitely differing opinions on that. But where I'm going with this is Sami Kassab published an article recently. He's the former Masari guy. And then he worked with JJ for a little while on his fund. And then he started his own fund, Unsupervised Capital, I believe it's called. Yep. And he published an article recently. He talked about several things, but one of them was, is that the right metric? Tending towards 1 TAO, the total of all the subnet tokens, is fully diluted value the right or the wrong value versus circulating supply to judge the subnet market caps on, and should we limit the number of subnets at 128? Now that's come up a lot recently as well. Should we just cut it off at 128 at least for the time being to prevent this proliferation of wild subnets? There's some crazy ones popping up. Like for example, the other day, Tornado Cash just popped up, which is a subnet, which is Tornado Cash, but implemented on BitTensor. Is that a really bad idea, or is that just we should live with these sort of things? So, David, I'm going to throw this one to you. What did you think of Sami's article and the contents therein?
Yeah, I thought Sami's article was great. I mean, he's definitely one of the really thoughtful people in the space, and I think he brings up like sort of at the highest level just a great perspective of this is a pretty new way to think about protocols, about subnets. When you fair launch these tokens, it's a different approach than thinking about some of these kind of typical protocols where there's a large amount that's already been sold to investors, and the allocations are already set up, and it's just cliffs. It's not sort of earn tokens as you sort of go along. So I thought, I kind of agreed in kind of, I guess, roughly with sort of what he was saying about fully diluted value. I think if we're looking at just the fully diluted value, it's probably missing like how to really think about the value of the subnet at this moment in time. He brought up kind of one thing, and then I threw in a second that he liked and added. But the first was basically within the first 24 months, about 50% of the supply will be out. And he sort of likes to think about more that 24-month window supply as the supply level. So maybe you take a 50% haircut on the fully diluted value. The other really interesting piece is the APY that you're getting on the token. So if you're holding an alpha token, right now for a year, you'll have 2 alpha tokens, roughly. So, that basically changes your cost basis, cuts it in half. So there's some interesting aspects around that I think are just good for valuation frameworks. And, I thought it was an interesting piece.
Yeah, that's a really, really interesting point. I agree with you that I agree with Sami actually, that, you got to look at the emissions if you're holding alpha tokens right now, because only 7% are participating, are wild. It's roughly 100%. Let's just call it that, right? So it's like a 2x, and so it's for let's say TAO is, I haven't looked at it today, but let's say it's like $400. It's like you bought TAO for $200, right? So it's sort of an artificial, but not artificial, because it's a real thing. You actually get two TAO tokens for the price of one, which is great, right? If you're holding an alpha. So right now, holding an alpha is a great deal. Michael, did you read this article, and what did you think of it if you did?
I did. I think Sami's spot on, and I met Sami along with Seth down in Austin. I'm excited about what they're doing. I would love to see 100 plus funds, specifically focused on the Tensor ecosystem, because again, I think the more the merrier. I think the more eyes we have on it, the better. The more capital we have engaged, the better. I think both really two primary points. One was looking at market cap versus fully diluted value. The other was sum of subnets versus injected over reserves. I think I think he's approaching it right. I would have loved to see the article be twice as long and have a little more kind of math backing it up. So again, I think he's arriving at the right conclusions. But I think you could do some really interesting case studies about value unlock when it comes to market cap versus fully diluted value. So you're looking at the proliferation of all the different projects that were built on the Ethereum network in 2018 through 2021, and what happened really with the kind of value unlock mechanism as people started building more and more and more to the point where things started trading at really insensible levels. And I absolutely, I've been vocal about that. I think that's going to happen as cash from the Ethereum and Solana, primarily blockchains, but Base as well, really discovers subnets. But though, all those traders are looking at market cap as opposed to fully diluted value. They're not, in a lot of instances, there's no math behind their approach. It's kind of like, hey, if it moves, I'm going to chase it. And whether you like it or you hate it, I think that activity is coming to Subnet. So I'm here for it. But yeah, I think it's also interesting. Talk about kind of psychology and groupthink. It's interesting to me that out of the gates, everybody was saying some of Subnets is gonna converge to one, and then now everybody's saying, well, now okay, injected over reserves is the measure I should be looking at. I think everybody should have their own metrics that they look at. I think you should be a critical thinker, and I think you should do the work for yourself. Don't buy a subnet. This should go without saying, right? But I think it bears repeating. Don't invest in a subnet because somebody else likes it, because at the end of the day, if it doesn't do well, they're not going to reimburse your capital. Don't believe that sum of subnet prices is going to 5 just because I say it is. Don't believe that sum of subnets is not going to eventually converge to 1 just because Sammy or anybody else says that it's not. I think everybody, just basic stuff, like read the white paper, read the dTAO white paper, understand the math behind it. It's super simple now to get with Grok for 10 minutes and plug in a bunch of equations from the dTAO white paper. And hey, really help me understand this and give me an example. Make that your prompt. Give me an example like I'm a third grader and I understand basic math. And how do I, help me to understand subnets. And I think everybody should have their approach. So yes, I agree with his conclusions, but at the same time, I'm not taking them as scripture. It could be we go a week from now and then there's another metric that everybody's following, but I think everybody should be malleable and think critically about it.
Yeah, I have to say, I've always thought that the fully diluted value was completely the wrong metric. My experience in crypto, since being here in 2013, nobody gives a shit at all about fully diluted value. They just care about market cap of circulating supply because that's what's in front of them. And they're like, that fully diluted value, like that could happen down the road, but that's not today. That's not like the live metric, right? So that's just been what I've observed. So anyway, Keith, what do you think?
Yeah, I reread that this morning. I figured it would come up on the call. So the conclusion that I came to is similar to Sammy's. Is we're so early right now. It's roughly 5.5% of the first 64 subnets alpha tokens have been emitted. A little bit of variation there depending on the subnet, but we're at 5.5% there. We're at 7.5 or 7.7% of the total TAO is now sitting in the subnet pools. There's so many paths for this thing to explode, whether it's the money coming in through more traditional investors like Michael's talking about, or maybe it's coming from other chains like the ETH or Solana or these type of meme type flows that could come in. Then you have just the pressure that's being applied as the root APY goes down to the existing basket of TAO. Then you got another 30% of TAO, almost 31% now that's not even staked to any validators. Basically, it's just sitting on exchanges. A little bit of that is sitting in wallets, but probably I would guess something like 26, 27% is just on the exchange.
It is. I've actually gone and looked. It's like on Binance and a few other places. So yes, it is.
Right. So the spigot there's all the spouts coming in. There's 4 or 5 of them legitimate, and then those are just the ones and then there's the market itself that could just all of a sudden decide that BitTensor, is the decentralized singular AI play for this cycle, and then just really start flowing in like we saw a year and a half ago when we pumped up into the 700s. So there's, call them 5 legitimate ways that I see value flowing in, and the alternative to that is nobody plays. Somebody's going to play, because if the other 4 don't play, then it gets even juicier for the one that does. You know what I'm saying? And what's going to happen is the FOMO situation is going to eventually create this, like, in my opinion, this domino effect. And when we get one of those, spigots to open up in size and the flow begins, the other ones are going to feel like they're missing it. And it's going to trigger what we're talking about of subnet prices exceeding 2, 3, 4 for a period of time. I don't know the math well enough to know if in 20 years it's all going to go back to 1, but we've got so much in front of us in the shorter runway of 12 to, let's say, 24 months that I have very little doubt in my mind that we're going to see an upward trajectory in that total. And that's how I've chosen to, place my bets.
Yeah, I agree with you that we have, 5 or so elements, any one of which could create a cascading effect and light up the other 4, right? And I think it's like, here's nitroglycerin, here's plutonium, here are all these things. If one thing explodes, it's going to set all the other ones off. And it does feel, I totally agree with you. It does feel that way to me as well.
Yeah. And Mark, it also doesn't even consider the fact that we've got like 100 garage-based teams all tinkering with something that could blow up at any time into some huge, social whatever. I mean, like, it could draw in, just like Shoots has done. It could go eat Open Router in a period of months. So, like, you could see this happen across 2, 3, 4 other subnets. It could easily happen. And that's the other element that I see, in addition to just like the capital inflow potential. There's also a bunch of training subnets like 3 and 9 that are like flirting with stuff that is highly revolutionary for training on the foundational model side, and that has the potential to just explode everything in the ecosystem, because a lot of the projects then link up to that. Like, you take David's subnet and you take the annotation side, and you bring your own data set, use his subnet to make it prettier, take it to 56, use it to train, do an additional training run on some existing models, and then you're hosting it on 64. You're starting to see like all the garages link up and the value proposition become one across the entire ecosystem versus just these individual sort of plays. And that's where I think that we will eventually end up, is like to take David's experience at Disney. It'll be like, you buy TAO, you buy the season pass, and you're not going to pay cash to the individual ride operators. You're coming in and just going from subnet to subnet as a developer, or even as an end user once things are simplified enough, like you're seeing some of the subnets do, like Shoots, and being able to leverage all of these intelligence commodities and combine them in novel ways that create value for everybody in the network and for all of us, but through TAO.
The composability is one of the big features, the Lego brick-like snapping together of subnets, which is just starting to happen now. I totally agree with you. And just, I'm gonna go around the horn here, but just sort of a vibe check on like, how are we doing? And I think we agree that the speculation piece has multiple components. We also agree, I think, that the quality of the subnets is quite high. The more time I spend in this ecosystem, and the more people I talk to, the more hash rates I do, the more excited I get. I'm just like, oh my God, it's like better than I thought it was. I thought it was kind of here, and it's like sort of here. And then there are a few things that I'm sort of like, I don't know about those, but probably 80 to 90% of it, it's sort of very, very good and better than I had thought it was before I started digging around in it. Right. So I tend to think that from a quality perspective, the explosion potential, echoing what Keith said, the potential for something like Templar to crack the centralized training, and oh my God, all of a sudden people are flooding away from the Web 2 centralized way of doing things into the BitTensor way of doing things, just based on that alone as the gateway drug into all these other things which are composable, is quite high. And so I'm going to throw it to David next. How do you, just gut check, how are you feeling about how BitTensor and TAO is doing from a quality perspective of the subnets?
Yeah, I mean, overall, I think really high. I think, that we've seen across multiple different categories, from, shoots with, inference and compute, to, Templar with training, to stuff we're doing around data, to, score with vision stuff. I mean, there's a lot of really interesting, stuff that could really, pop off and start to showcase what's possible here. I think the one sort of like vibe check to the other side that I would like to see a new subnet emerge that isn't tied to some OG in the space in some material way, that, has attracted a team to come and really see the potential with BitTensor. And maybe to circle back to my, kind of TAO weight piece and just some of why I think that's important is I think if we all ask ourselves, make a pitch to someone to start a subnet, I think it's a harder pitch today, than it was a year or so ago when I was sort of looking to join. I think you have a big advantage having a reputation and having been around the ecosystem, coming in as a new group where you're sort of expected to, earn your way in, not be able to sell any alpha token probably for even longer than teams that, have established themselves. I think that's the one thing I'd like to see us kind of cross the chasm on and feel like, oh, wow, there's a team sort of out of left field that just built something really, really special on BitTensor.
Do you have anything you want to plug before we go?
No, I don't. I have some alpha that I was going to drop, but it's a little too late for that. So,
damn it! Oh well.
All right, I'll come here. I think the other important thing, maybe tying into, look, we've got subnets now at like what we're getting close to 110. Maybe we'll set a limit. Maybe we won't. Information is, going to become more and more sort of critical in the ecosystem. You guys may have seen what we did in partnership with Seed Phrase, who's, one of the largest NFT collectors in the world. Really wanted to demonstrate the value of structured data sort of in a very understandable sort of use case first and a little bit broader than just the BitTensor ecosystem. But we will be dropping a agent around TAO very soon that we're excited to kind of get out there and
super cool.
And have some unique ways in which we want to tie that into the alpha token.
Yeah, I'll look forward to that one for sure. So, Michael, final vibe check on the quality of the subnets, and is there anything you want to plug?
Yeah, I think it's optimistic. I think kudos to David and the Subnet 33 team. Something like the Seed Phrase partnership, I think is phenomenal. It brings a lot of just eyes to the ecosystem when people see the quality of output that's capable. Quite frankly, that's a marketing expense that you and your subnet decided to take on for the ecosystem without being asked to do it. It just gets a lot of good eyes on the ecosystem in general, and I think that needs to be celebrated. I just love. What we're seeing now is potential for a lot of subnets to be working together, the more I see subnets working together, the more excited I'm going to be about the ecosystem. Right now I feel like we're kind of coming out of the scarcity mindset, right? Where mid-February 14th until now, everybody's like, okay, this is going to be wild, and I don't know what it's going to look like, and I just want to survive. And now I think subnets are starting to. Ownership teams are starting to realize that, hey, if I work together, Templar into 64 on shoots now, I think is a phenomenal example. If I work together with other subnets, a rising tide is going to lift all boats. At the end of the day, for me, the quality and the caliber of individual working on subnet ownership teams right now is just absolutely incredible. You can't find that level of talent anywhere else, as far as I'm concerned. So that makes me incredibly optimistic, and I'm ready for Subnet summer. I got my swim trunks on, my flip flops. You can't see it, but let's go.
Nice. Keith, final vibe check on the quality of the subnets and anything you want to plug. Go for it.
Yeah, I think the quality is definitely going up, mostly because of the competitive aspect. The thing that's really going to start to make that needle move, though, is we're still waiting for artificial intelligence to catch up with BitTensor, honestly. I was talking to a guy recently, not a developer, spun up a couple miners, successfully kept them registered, no coding, just went in and used the existing LLMs that can build miners for him and plugged it into BitTensor, and the dude is earning. Like, so we've saw, like, if you look at mining and you go back for like the quality of BitTensor and the intelligence commodities that were being generated, it's very shitty in the beginning. I mined myself, didn't know what I was doing, made some TAO from it. Then it got very hard for like 2 years. And now it's getting easy again because you can use AI to build the miner for you. When that starts happening with subnets, then we have reached the true democratization of artificial intelligence. And that's what I'm waiting for with BitTensor, is like for it to go into easy mode. And again, going back to the kind of the theme for me on this thing is leveraging the creativity of everybody that wants to be involved in this project through using artificial intelligence itself. So that's the thing that I think where we see a big sea change is when we get that happening. TAO.com. We have an app coming out very shortly. We're testing it internally at the moment, and check out 81 Patrol.
Nice. All right, gentlemen, I really, really, really appreciate you all coming and sharing your brains today. I think this was a fantastic panel. I think we should do this again a couple times down the road. So that's it. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.